Boys, let's keep it simple. There are only two events this week that you need to be paying attention to. First and foremost, this Thursday, we've got non-farm payrolls coming out. I mean, let's be honest. It has been way overdue. We're going to be talking about what you guys need to be mindful of with regards to the data that will be released this Thursday. And the second event we're going to be talking about is tomorrow. Nvidia earnings is going to be released tomorrow. It's going to be a big one. You want crypto, you want stocks to pump. That will be the deciding factor for how this market will play out in the next 2 weeks. The big moves for BTC is going to be happening tomorrow. You think this is violent? You think this Asia session is violent? It's going to be a hell of a lot more violent tomorrow. US market close after Nvidia shares their reports. So pay attention. Don't miss out on what's going to happen. First and foremost, this one. Most important event. Because this is going to affect not just the US, but everywhere around the world. Go and invite your friends. Grab your parents. Okay, they don't understand about financial charts. That's okay. Sit them down in front of the TV. Plop this up and plop the NASDAQ chart up. And at 9:30 p.m. Hong Kong time, November 20th, sit them down. Probably going to be a bloodbath. And let me explain why it could be a bloodbath. Look, listen. These data that we're getting are only for September. We're not getting the big picture. We're not getting the October data. Because remember, the US government was shut down early October, right? So we're only getting September data from then on. The Bureau of Labor and Statistics, they still need time to wash that data and get it all organized. And trust me, government workers, very efficient, okay? I told you about that story yesterday when I went to get a visa application at the Indonesian consulate. Dude, big building, by the way. I walked in, only one lady at the desk. 3 people, I had to wait 1 hour, okay? So if you live in the US, I don't know, if you have access to the Bureau of Labor and Statistics, pop by their office and see how they're doing. But all in all, we're only getting September's reading. All right, we're only going to get the non-farm and the unemployment claims for September. And in a way, it's still very important. But this data on Thursday is going to effectively, I think, put a nail in the coffin. Are we going to get the interest rate cuts going into next month? As you can see, the odds right now still not looking good. Okay, we're still below 50% probability. And that's not a good sign. But the market right now, at least, is already pricing in the idea that we're going to be holding the rates at 4%, which is why you're seeing Bitcoin, which is why you're seeing tech stocks taking a bit of tumble. So I think at this point on, a lot of investors are like, okay, well, what's the story now? What's going on? You know, if they're not cutting the rates, what's going to happen? Well, look, Thursday is going to put into a bit of perspective for you. You'll see a much clearer picture. Okay, here are the scenarios. So this is where it gets a bit tricky, because if the non-farm payrolls data come out and shows a soft reading, that's good news. Look, the forecast is now showing 58,000. That's soft reading. That's actually good news. That's what we want to see. Previous number was 22,000. Anything that's positive is good. It's good for the economy. It means there are a lot more people working than what they expected it to be. Okay, this is the number you want to look for, the forecast. But, okay, if it comes out and shows a horrible reading, if the actual number is in the negative, all right, that means there's a lot of people unemployed. And then you've got the average hourly earnings sinking. The forecast is kept at 0.3%. Like a bit of a slight discrepancy there. You want your average hourly earnings to be slightly up in tandem with non-farm payrolls also being up. But why is average hourly earnings still remaining the same when you are forecasting a much softer reading? So in reality, I don't know. I think we might be very surprised this Thursday. I don't even really want to joke about this, but if we see negative, especially in the like maybe 30,000 or 40,000 or even negative 55,000, it's going to come as a shock, because it means not just the market anymore, guys. It's not just about the market anymore. It's about the economy. It would mean the economy is truly struggling. That means the topic of recession has to be taken seriously. It's very likely we might be going into a recession. And that's going to be a big problem for us because market participants won't be thinking, they won't even be thinking about interest rate cuts. They'll be thinking about safety because they will believe that the economy is more likely heading to a recession. So put that into perspective. We're going to be paying attention to this, the beverage curve. Why is the forecast, first and foremost, showing soft reading, 58,000, when the beverage curve is showing us for the first time in a year, the blue line, the unemployment individuals, is crossing above jobs opening. Right? But this is based on past data. The latest readings from the beverage curve is as of August 2025. The readings that we're going to be getting on November 20th, Thursday, this will be for September. Then they're also going to have to process October data, which I think will come in when? December 5th of December. Remember. This is for October's data. Okay, we're lagging behind now because US government shutdown, longest shutdown in history. They have to catch up. So the even bigger news apart from this Thursday would be the same exact event but on December 5th. This will be even bigger because this will tell you what the economy is like during US government shutdown. This will give you an even bigger picture, which I think kind of makes sense because if you see November 20th, the forecast is soft reading. It's 58,000 jobs added, despite the beverage curve having more unemployed than there are jobs opening. Then maybe the real spike to the upside for the blue line and possibly the spike to the downside for the red line would be off of the news on December 5th. Mark that on your calendar. The Feds are watching this chart very closely. That's why they're being very hawkish right now when they're focusing on labor market data. If they do in fact come out positive, then great. This is just a fake out. You'll see the blue line crossing below the red line. And that's what we want to see because that would raise investor confidence. All right. Then you'll see more investments coming in. But dude, if the topic of recession comes in, it's just all about every man for its own. Okay. So pay attention to the beverage curve if you have not yet already. It's not just all about crypto. Because right now what we're seeing, TLDR, is big investors are de-leveraging their risks and rotating their money. Look, for NASDAQ, even though you had pretty sexy movements at market open when it bounced up, but look at the daily, look at the closes. You have 6 consecutive red days. You look at the S&P 500, 4 consecutive distribution days. What does this tell you? It tells you that investors are starting to reposition themselves. And I think this week would be the deciding factor because the good news is this week we have, tomorrow, it's not this week, tomorrow we get Nvidia's earnings. And that would be after the market close. And if Nvidia does not come through, boys, everything's going to be dropping. Simple as that. Okay, everything is going to be dropping if they don't do well with their earnings report. You look at the past year, Nvidia's quarterly growth has shown clear deceleration from a peak of 71% earnings and 78% sales growth since January 2025, quarter 1. All right, quarter 2, earnings have dropped, but sales went up. Okay, this quarter, we better see both earnings and sales beat market expectation. They can't just come in even, man. I swear to God. Imagine if Nvidia says, oh, demand has slowed down a bit, then GG, well played. Down in the crapper we go. Q4 is going to be a bearish close for the tech stocks, and that will spill over into crypto. Then they're going to say, but our cloud services, they're doing wonderful though. Great, here's a consolidation price. Speaking of cloud services, Google's cloud services are doing great, which I think is why Warren Buffett is exactly buying up those shares. All right, it says here, a quarterly 13F filing showed Berkshire owned roughly $4.3 billion worth of Alphabet as of September 30th, making it the firm's 10th largest equity holding. And let's see Google's price right now. How's it doing right now? Not bad. Yesterday, closed bearish, but it was a gap up, I think, off of that news. And it's at all-time high territory, so there's nothing to complain about. It's doing fantastic for Google. right? But my view is if Warren Buffett is buying up Google right now, then I think he's on the idea that there is a demand for a service, because quite frankly, like we're talking about rich investors, they're only going to go into a company or invest or purchase the product if it solves a problem or makes life a little bit easier. And Warren Buffett is a value investor, and he's probably not interested in the tech market overvaluations right now, because principally, look at the Nasdaq. This is an overvaluation. It's overvalued. What I'm trying to say is that they're overvalued by the context of its price. Okay, but Warren Buffett, he's looking at it from a different perspective. I think he's looking at these data and he's saying, oh, they smashed it on their quarterly earnings for the services they're providing, and cloud-based services is where it's at. So that's where Google's strength lies. So Warren Buffett is on the idea that, okay, well, we're in AI and cloud services. That's where everything's going. I'm going to invest in that idea because that doesn't look like it's slowing down. So looking at the chart, it's like, it doesn't look like it's slowing down. So I'm going to invest in that idea. He can, but think about it. Bro has $365 billion cash, and his position in Google is how much again? $4.3 billion. He can absorb the drawdown if Google tanks. If Nvidia's earnings come out tomorrow that it's not good, their sales are down, their earnings are down, then Nasdaq's gonna tank. I think all of the other US tech stocks are also gonna tank. Then Warren Buffett's okay with that. Bro, this is like, man, you're talking about 1% risk. This guy's 1% risk is $4.3 billion. Okay? So he's okay with absorbing the drawdown. And it just really all comes down to tomorrow, really. Because if Nvidia doesn't do well, it's going to mess up the market's narrative, okay? And speaking of Nvidia, the price right now still at all-time high territory, right? It peaked, new all-time high at 212. Now it's currently trading at $186 per share. And it's stalling, which is actually quite brilliant, because even though we're seeing the environment that the US is in, right? Even with the story, the narrative of the Feds holding the interest rates at 4%, the charts are showing you that tech is very resilient right now, with the idea whether the interest rates are going to be cut or not, okay? And if Nvidia does very well, if both their sales and their earnings come out really, really good, beating market expectation, is the type of, the numbers has to be, like, you look at it and you're like, ooh, damn, way better than Q1. Q1 was their peak performance. Q2, Q3, they kind of slumped down. A bit of divergence between sales and earnings. But if Q4, both earnings and sales peak, right? And that's going to be good. Then that sort of reinforces the narrative that what's happening on the Nasdaq right now, it's engineered to come back up to create new all-time highs, okay? Because everyone is saying structurally, this is a good bull market. What we're seeing recently is just distribution. That's just how the market works. They expand and they correct, all right? We're only going to know that's going to be the case if we do have a bit more assistance from the Fed side. Because, man, you're in crypto. The only narrative we have right now is the rate cuts. That's it. Speaking of BTC, look, let's address the elephant in the room. You see headlines like this. Last night, BlackRock deposited 4,880 BTC and 54,730 ETH to Coinbase Prime deposits, meaning they're going to sell. And if you look at ETF inflows, it's 4 consecutive outflows. Right, red across all investment funds. They're selling the BTC. The clients are selling the BTC. The principle for them is simple, because they don't have the same vision as Michael Saylor. Look, there's whole different subclasses in the rich people category. You have Michael Saylor that is like 1 BTC equals 1 BTC. It doesn't really matter to you how much BTC is, right? Look, in a recent podcast, this is what he said. Listen carefully, okay?
I don't believe in 4-year cycles anyway. I mean,
I never believed in the 4-year cycle.
I think that they might have had some credence in the first 12 years, but right now, the 4-year cycle is somehow based on the idea that 225 Bitcoin a day get taken out of the supply.
Okay, Michael Saylor is saying the 4-year cycle is dead. Your boy, Michael Saylor, your boy, the mascot of Bitcoin, is saying, 4-year cycle is no longer a thing. You think he's yapping? Bro, look at how much Bitcoin institutions are holding. 790K for BlackRock, 200K for Fidelity, 170K for Grayscale, 21 shares, 40K, Bitwise, 40K, ProShares, 30K, VanEck, 17K. You'd think VanEck has a lot. They only have 17K, and they're going to get their hands on more on behalf of their clients, only if those clients are like, which, speaking of, right, I'm talking about, let's go back to that topic of the subclass war between the rich people, right? Entirely different. You have Michael Saylor is saying, 1 BTC equals 1 BTC. You can short MicroStrategy as long as you want, just buy BTC. But then you have, looking at the outflows. These are your everyday traditional rich people clients where they're looking at their spot ETF portfolio. They're like, yo, BlackRock, why am I down? Or why am I in drawdown? Sell that shit. Sell that shit so I can have my money converted to yen, lock in a 1% yield there. Right? They're playing with billions of dollars. They're going to take 1% yield. Okay? So they don't have the same philosophy as Michael Saylor has, where 1 BTC equals 1 BTC. Because these are old people, man. They only care about fiat. The debt of US tells you that fiat is here to stay in our lifetime. You know what I mean? Like, fiat is here to stay. The talks of recession are out the window, even with the data that's showing us we might be in a recession. Look, BlackRock clients sold 4,880. Michael Saylor bought 8,178 BTC. He bought it twice. Right? You say, okay, you sell 4K? All right, I'll buy 8K BTC. Your boy is saying the 4-year cycle is out the window. If you truly believe 1 BTC equals 1 BTC, then you shouldn't care what the price is. But I'm thinking you're probably like me, where we don't have the 10-year, 20-year, 50-year time horizon to hold BTC and make a lot of money, which is why you're seeing why people are so shook about the price of BTC. If you're new to crypto and you've been taught that 1 BTC equals 1 BTC, price shouldn't matter to you. Yeah, it shouldn't on principle, but at the end of the day, man, we're in an economy where fiat is still mostly transacted. We need the money, right? And especially these few months with the rise of perp dexes, look, the volume just going up for perp dexes since 2025, since summer 2025. Goes to show you what does this data tell you? If a $40 million spot sell, okay, on Binance is able to move price so much to the downside, then it tells you that most of the retail are on perps, which, if you haven't, by the way, trade on Aster. It's really, really good because the season 3 airdrop was actually hella underrated. Martin gained 5 million points. 1.5% supply, but the participants were much less than season 2 Aster airdrop. That was when Aster was starting to get hot. Everyone was farming the airdrop. That's why the airdrop was a bit diluted. But then in the end, they doubled the allo, which is great, right? So season 4 is currently live for Aster, where it's mostly perps volume, right? You must reach at least 100K in perpetual trading volume to be eligible for any rewards. It's not hard to get 100K in perp trading volume. We've spoken about using delta neutral strategy where it's so brain dead. You go long here on Aster and then you go short in Hyperliquid, right? It's still volume. They still care about volume. So use our Aster link, join our team. It's great. It's fantastic. So yeah, TLDR, if the world is at an uncertain phase right now, then the obvious asset to rotate to should be store of value, right? Like Bitcoin. Why aren't we seeing Bitcoin pumping? Because other market participants, the other rich people, they have a stake in Bitcoin. And they're just deleveraging now. Okay? We're only going to panic if we see a weekly close below 74K. Then goodbye. See you next cycle. But Michael Saylor, he'll still be buying. He doesn't care. All right. Take good care of yourselves, boys. Love you. Love you. Oh man, it sounded so zesty there. All right, my name is Ron. Shana now.